Are you worried about making your mortgage payment? You're not alone. Some 6 million Americans have filed for unemployment, and they are concerned about where the money's coming from to make their next mortgage payment. Now, the government has given you a solution by getting a forbearance on your loan. I'm Chris Spade at Keller Williams Realty. We sat down with one expert to find out why that might not be such a good idea. Now, just a few weeks ago, we had talked about the benefits of actually getting this forbearance on your mortgage. Now, there's some fine print that's come out that could cost you quite a bit of money. I sat down with Movement Mortgage Loan Officer Wes Shaw. We've known each other for 13 years, and I decided to bring in this expert to tell you the benefits and the challenges with doing a forbearance on your mortgage. Take a listen. All right, well, let's get started. So, everybody, welcome to the podcast or the YouTube channel, whichever you're watching this on. I'm Chris Spade, your host of A Pulse on San Diego Real Estate, the podcast where we hope to make you smarter about your real estate decisions. And today, I am talking to Wes Shaw from Movement Mortgage, and Wes has been on this podcast before. And we've known each other for like 13 years, I think.
Yeah,
And we met when the real estate market crashed in 2008.
fun
So
times.
I know that was a fun time. And so we've been through a couple economic shifts together. This will be our second significant one, which I think it's pretty significant that we're going through right now. And one of the biggest things, I mean, we can reminisce about 2008 for a little bit, but one of the things that everybody's talking about is their mortgages and what they're doing with their mortgages. And, the president came out and said Fannie and Freddie is going to offer relief to people who lost their jobs. And we're going to discuss why that might not be your best option. So,
Definitely. I think the first and foremost, what we want to start with is the government did a terrible job at getting the message out. And a lot of people are thinking that this forbearance option means forgiveness, equals forgiveness. It's not a freebie. Forbearance does not equal it freebie. It does definitely give people a break. For those of us who have lost the ability to earn income temporarily because of what's going on, you will get a break in making your payments, but the entire balance will become due and payable at the end of the forbearance period, whether that be 3 months or 6 months or 9 months or 12 months. And you really need to get in touch with the servicer, the company that sends you your mortgage statement every month. You need to brave that customer service hotline. I know millions of people are calling in to request a forbearance right now. So I'm hearing a lot of stories about busy signals. A busy signal, I had one client tell me she hadn't heard a busy signal since the 90s. Her and her mom got a good giggle out of a busy signal when you call the servicing company. But we have millions of people that file for unemployment. 6.6 last week, millions more this week. We just got unemployment yesterday. So there's a lot of people that are looking for this option, looking for this relief so that it'll help them get through these tough times. So the options are available. You just need to get in touch with your servicer, and you need to understand that if you do take a break, if you can make it through without taking a break, if you're still earning income and you're still employed, please don't file for a forbearance. We need to keep those channels open for all the people that are experiencing a hardship right now. And it's so hard for them to get through, and it's so much paperwork, that they have to process on their side. We don't need to clog up those channels with people that can actually have the ability to make their payments during this time. So
So
my main message is forbearance is not free. And the news media didn't do a good job at presenting the information, and the
now we're
government wasn't really clear about it either.
So let's talk a little bit about what the forbearance is. So it's the ability to put off your mortgage payment. However, what I is my understanding, and correct me if I'm wrong, is that many lenders, let's say in May you go on this forbearance. So you don't have to make your mortgage payment for 90 days. So you wouldn't make it in May, June, or July, but in August you're having to make your August payment plus the last 3 payments. So you have to make almost be making 4 payments in August. And that is where the problem is going to be, because if you can't afford to make it now, you're not going to be able to make 4 payments in August, correct?
Right. Don't be like our politicians and kick the can down the road with respect to the bills. Just go ahead and, if you need to take that break because you've lost your ability to earn income, then by all means, this option is available. The government is helping roll it out to people to help. The other thing that our industry is trying to bring to the government's attention is we want a demonstrable hardship. Like I was saying, we don't want the system clogged up with a bunch of people that are just looking for a freebie. And that protects the investors, that protects the system, the industry as a whole, to just restrict it to those that need the help, so that we can provide the help to those that need it most.
Right. And just just so a lot of people are clear, because I don't think a lot of people know what you mean when you say servicer. So when you apply for a mortgage, you get your mortgage, but Movement Mortgage, is bundling that up and you're selling it, right? And
Yeah, when you get a loan, it's packaged and sold with, you get your loan, we go through the process, you close escrow, you move in, and then a lot of other things keep on going in the background. We call it our secondary market. That's where your loan and thousands of other loans are packaged up and securitized and sold as mortgage-backed securities in the bond market. And big investors like pension funds, like CalSTRS, CalPERS, for example, hedge funds, and really international investors come in and they buy that debt, just like investors buy treasury bills. They buy mortgage-backed securities. And that's how interest rates are set, is the trading off of the mortgage-backed securities, the yields on these mortgage-backed securities. But to answer your question and make sure there's no confusion, when I say servicer, I'm talking about the company that is servicing your loan, aka the mortgage company that's sending your monthly statement, your year-end tax documents, and that is on the other end of that 800 number that you call. That is the servicing company. Their job is to collect the payment and advance it to the investor who bought the mortgage-backed security. And so, kind of goes into what we're going to be dealing with as an industry with our servicing, having millions and millions of people become unemployed all at once. The servicing company still has to forward the payment to the investor, even when the forbearance is in place. So even though you, the consumer, are not making your payment, the servicing company still has to send that off. And so it's gonna strain the system and tax the system. And right now it's a fluid situation. We're right in the thick of it, with the government trying to figure out how they're gonna best provide support. And Calabria, the head of the Federal Housing Finance Agency, is really pushing back and saying, like, you guys aren't too big to fail. So we're gonna have to wait and see how this unfolds. It's gonna be a really interesting situation, definitely.
so 2 questions come out of that. First of all, we were talking the other day, which kind of sparked this whole, Zoom call that we're doing. When you are doing a forbearance, what does that look like for your credit? Because it's going to have an effect on that, is my understanding. And then second of all, do you think that we're just, like you said, kicking the can down the road and opening the door up to more defaults down the road? Maybe not necessarily short sales, because people likely have equity right now, but do you feel down the road that this is just kicking the can to open up for defaults down the road for people?
Well, there are definitely going to be those people, that unfortunately lost their employment, and they're going to have trouble, seeking their next employer and securing their next job, and getting the money back into their pockets. Credit card use is up. We see Americans are accessing credit, and that in itself is just, accessing future economic activity to use it now, right? Like and when someone uses credit to the extent that we are now in America with the loss of income, we're kind of taking away from future activity, because we're going to be carrying this debt through to the other side. With respect to the credit report, when you have a forbearance in place, your terms could update on your credit report. Instead of current, paid as agreed, it'll update to forbearance. Just like a student loan would, if you were not making your monthly payments in a student loan. If any of you guys have student loans, you probably are very familiar with the forbearance process. When you were going through school, they didn't ask you to pay until you got through with school.
Right.
So it's the same thing with the mortgages, and that status will update on the credit report. We're being told it won't be negative. It's not, forbearance will not be negative, provided that you follow the agreed upon terms. You take the break, and at the end of the break, you pay the balance 100%. Then you should walk away unscathed, and you should just have a temporary change in status during the forbearance period. Should have little to no impact on your credit report. Now, that being said, if you get to the end of the forbearance period and you don't have enough money to make the payment, then we're going to start talking about options that are going to impact your credit, right? Like you're talking about people who have a default. There's an option to defer the payments. And you remember this process when we were doing short sales with people in the last shift that we went through. And, people had to fill out the financial packet and investigate a loan modification. So that would be the deferment. They would take the payments and move it to the back of the loan, for example. There's a number of things that they can do. They can take the amount that you owe, and they could chunk it out and add it to the monthly payment. They could add it to the end of the loan. That's all terms that you would discuss with your servicer as part of the loss mitigation process. And the loss mitigation process is just them trying not to lose money.
Right. Because regardless, it's got to be paid back, because somebody else has already taken the risk on you to borrow you the money. And so,
right.
Yeah.
To lend you the money. So, it'll be interesting to see. It'll be interesting to see how this unfolds, with our local real estate market here in San Diego. And I know that you can attest to this, Chris. We're in an extreme seller's market, which is just 100% different than the last recession that we were in, where we had a real estate bubble. Yep. That's another thing that I think is really important for people to understand, is that, they think that R word, recession, and they think like, oh, holy bejeebers, there goes the home values, or, oh, right, like home prices are going down, I'm going to get a deal. I'm just going to wait until those prices drop, and then I'm going to buy my house then. And I have to explain to them, unfortunately, that, last recession, it was a housing bubble that caused all that inventory to come to market. And so far, we're not forecasting any situations like that at all. Right. I'm sure that you can attest to the same on your end.
Yeah, as a matter of fact, since this whole COVID thing started, I've closed 5 escrows, pended 2 more, wrote an $800,000 listing that I've now got on the market. So there's activity, right? And we're selling houses virtually. So the dynamic of the real estate market has shifted. The demand has not gone down. And so that's why I keep telling people, if you think that you're going to put your house on the market, or you're in a position like this where you can't make it, or you don't think that you're going to have the savings to cover yourself for like 6 months and try to find a new job, I tell people, people are just sitting at home looking at pretty houses and making babies. So this is your time to do that, because you have more eyeballs online than you ever have before. So that's a huge benefit. One of the things I wanted to talk to you about too, since we're talking about mortgages, is what does the future forecast of interest rates look like? I know that, several weeks ago we had dropped into the threes. I know some people were talking about 2.75 that they got locked in at, and then they shot up because, the stimulus package passed, and so interest rates went back up. What do you think is going to happen with the future? I know you don't have a crystal ball, but if you had to project, what do you think is going to happen with interest rates?
Absolutely. Yeah, no one has a crystal ball. However, I follow all these super smart people. When you and I were going through the last change in the market, back in 2008, I noticed that these guys were kind of reporting on it and telling, all these important things, economic reports and what's going on. So I follow those people, Barry Habib, David Shermeyer, Brian McNee, Rob Chrisman. There are these industry leaders that I follow. Barry Habib is always saying, there's quite literally only like 1,000 people on the globe that understand it completely. So it's just kind of mind blowing when you think about it in that regard. And no one has a crystal ball, but they can look back at the past and they can use that to project forward what they think will happen. And we have the Federal Reserve coming in right now with all the programs, to be the backstop for the economy, which is the whole reason why they're there in the first place. The same thing that they did back in 2008. So they're stepping up to the plate. And they actually stepped up to the plate and they did a little too much too fast this time. Actually, we make about 5 billion in mortgages a day as an industry, and the Fed came in within a matter of about a week and a half, and they purchased $130 billion in mortgages in that secondary market that we talked about, mortgage-backed securities. Yeah, and so just think about supply and demand. Like that just threw supply and demand out of whack tremendously. And their action in doing that, supply and demand again, it sent rates down because rates are tied to the yields on those mortgage-backed securities. So when there was a lot of activity and they were coming in and scooping them all off the table, that caused interest rates to go down. And they went down so quickly that it triggered these insurance policies that lenders have to have margin calls. We had tens of millions of dollars in margin calls in the mortgage industry across the board. Because a lock, when you get an interest rate lock, that lock is just a promise that the lender is going to deliver that loan to the investor at the end of the process. And so the lenders all have insurance policies that cover them and help them hedging their risk in the market, just in case the market changes between locking the rate and when we close escrow. So, those insurance policies are in place. And when the rates came down so quick, that's when the broker dealers were calling and saying, like, guys, you have margin calls, pay up. And so we saw we did see a temporary dip in rates as the Federal Reserve was stepping in and doing all the things they do, but they did a little too much too fast, and it sent some monkey wrenches through the system. So we're just waiting for the monkey wrenches to pop out the other side and kind of get a handle on COVID in general, which I saw an article, Wall Street Journal on Sunday, that said, places like New York and New Orleans could be peaking within about a week. That would be great, wouldn't it? We could get to the backside of this and start rebooting the economy. The projections are all as such that the Federal Reserve is stepping in. They are being the backstop. They're providing liquidity to the market. When they do that, the side effect or that they cause when they do that is a period of low interest rates. And that's their intention, is to have low interest rates be very prevalent in the marketplace so that credit is easily accessible and at a lower cost to help reduce the strain on the overall economic activity in the economy. So we are projecting that we'll have a pretty solid period of low interest rates ahead. Now, where to exactly call we're going to get to the bottom, isn't that the $1 million question? Like, if I had that answer, I'd be talking to you from my own private island.
On the jet that you flew there on your own, right?
There you go. Exactly.
Yeah, exactly. Exactly. So just so we're clear, and the pre-approval process is easy, right? Like, so if somebody decided, you know what, I am in a position, my job is secure, I'm going to keep it. I want to move forward and make a purchase. The process of actually applying for a mortgage is not difficult, is it? It's quite
No, it's not difficult at all. Right now, the house is, I tell all the people, like you said, you have people going to escrow. I did too. I'm telling the people the house is the opportunity right now, guys. Mortgage process, lickety split, so simple. Like you just go fill out your information online, you get your income and asset docs together, we get you approved. Like that's not a problem with conditions like you provide. I'm sure there's like a disclaimer for that.
right.
But
Yes, it's not
it's such a simple process. You just hop online, you fill out your information, you upload your pay stubs and your bank statements, for example, and we look at that, we pencil it out, look at numbers, and boom, we get it situated. And movement mortgage, we take a step further and provide upfront underwriting, to everybody, so that that you have all your ducks in a row and you're ready to go. So that is not a problem at all. And I think that now, if you are financially stable with respect to your income and your assets, and you're thinking about buying a place, like right now, there's not a lot of not as much activity as there would be in a normal spring market in San Diego, because there's so many people that are just hanging out at home, waiting to get to the backside of this.
Yeah.
They put it on pause.
And what's interesting is properties are getting listed, and they're getting listed in all price ranges. So it's not, it's not one specific price range. One thing I did want to ask you, because we had talked about this at a couple team meetings, and I forgot to mention that Wes works with Movement Mortgage, which is the preferred lender in our office at Keller Williams Metro, which is, obviously we've known each other a long time, but that's the other reason why Wes is here. What's going on with the jumbo product? Because that's been a big bit of conversation that we've had over the last, week to 10 days. What's going on with jumbo loans, and what is a jumbo loan?
Yeah, so the jumbo loan is a loan. So there's three different categories for loans when you're going to borrow money. There's a conforming loan that goes up to $510,000. Then if you're borrowing more than 510, up to 701, then it's a high balance loan. And if you're over that $701,000 for your loan amount, then you're looking at a jumbo loan. So that's what a jumbo loan is. And we work with all the institutional investors at Movement Mortgage. We have access to Wells and JP Morgan and Chase and US Bank, and the list goes on. What happened was, and what we saw again back in 2008, when we were going through uncertain times or tight times, or economic downturn, whatever you want to label it, we saw a tightening of credit and underwriting guidelines. And so we're starting to see that again now. For example, before COVID, I could help somebody out that had a FICO score maybe as low as 580. Now you have to have a 640 or higher for a FICO score. So there are little tweaks that are being made to underwriting guidelines. This weekend, Fannie Mae is going to release the next version of their computerized underwriting system. Fannie Mae is the government insurance company that insures mortgages here in the United States, not jumbo loans, but mortgages. And so, that falls in the same suit, in that Fannie Mae is adjusting their guidelines. Jumbo underwriters are adjusting, jumbo investors, are also adjusting their guidelines. And we'll probably just see a general tightening, restrictions put into place just a little bit more. They're just going to tighten the purse strings a little bit more. Just kind of make sure that they're hedging their risk. That's all that they're doing, is just making sure that they're lending, hundreds of thousands of dollars to somebody that's going to be able to pay it back to them.
Right. Well, is there anything you wanted to add that I didn't ask you that we should make sure everyone knows?
I think that the proper, appreciation. Another thing I saw in Inman, I think this is great. It speaks to the people who think that the recession is going to make home prices go down. A balanced market here in San Diego is about 4 months inventory. And what were we at last we checked? I think it's like 1.4.
Yeah, I want to say, yeah, around that. So,
Around 1.4 months of inventory here in San Diego. So we're in such a solid seller's market. You know, Chris and I are always going to these market update meetings. And at the last one, Ashley was telling us we could quite literally lose half of all the buyers in San Diego and it
and
would
still
still be a
sell,
balanced market.
and still sell all the houses.
Still sell all the houses. So, you know, like this is going to be a situation. And what I was starting to say was Inman came out with an article that said they were saying appreciation maybe goes to half of what we were expecting. But the San Diego Association of Realtors, they had it clocked at 7.8%.
Right.
I mean,
And that's important because there's a lot of people who don't quite understand that, well, let's say the market does go down, I'm paying more for my house. Yes, but your house is still going to appreciate no matter what. And what you have to understand is that by buying today, you're building equity. So you're actually saving for your future now. So you have to ask yourself, like, what is today Chris going to do differently that 5 years from now Chris is going to be thankful for? And so I think
right.
that's an important conversation to have too with buyers as well.
Absolutely. You know, any financial advisor, financial planner, my financial planner would always tell people the first thing you want to invest in is your primary residence. You know, secure your primary residence. You're always going to have a housing expense. So you might as well make that housing expense work for you through appreciation gain and amortization gain, which is just a fancy way of saying you're paying down your mortgage,
Right.
making the
Exactly.
payments.
Equity. You're making yourself
Equity.
rich.
Yeah, and with everything going on in the stock market, you know, look, real estate is a fantastic way to diversify your portfolio.
Yep.
You know, whether you're buying your primary residence or a second home or an investment property somewhere because it's just a safer place you think you'd like to park your money than the stock market right now. I
Yeah.
know I would.
Yeah. Well, we've had that conversation personally, that's what I'm working on. So yeah, I get it.
Definitely.
I get
So
it.
I that's just a lot in closing or just in, you know, to wrap it up, that's the last thing that I would add. You know, if you go back to the beginning of when they started to track appreciation and
Hmm.
went all the way through to today, it's 5% per year on
Yeah.
average.
Yeah.
You know, so you buy a home and you're not a real estate investor trying to time things perfectly, you're gonna be fine. You're gonna walk away, you're gonna buy a home, and 5 to 7 years from now, or however many years from now, you're going to have a nice nest egg to either move into another home or to just continue saving and adding to in the future. And I think that with Chris's help and my help, you know, we could just keep the process so stress-free and exciting. You know, it should be a fun process. It's going to be your home that you're going to live in.
Well, there'll be a little stress, but not a ton of stress. Like we make it so easy.
Yeah, I think, you know, as long as the people follow the cardinal rule of contacting us when they feel those stressful moments, then they will have little to no stress,
Yes,
definitely.
and trust me, we've heard all the different kinds of stress out there. We've heard it all.
We have to wear that hat sometimes, right? Like a therapist, you know,
Yep.
I'm getting all the calls from people who don't know how to make their payment right now. It's unfortunate. They're not the many, but there are a few.
Yeah.
And it's tough. And so my message in closing is just for everybody to, you know, hang in there. There's light at the end of the tunnel. We are headed towards that light. You know, keep your routine. You know, make sure that you're paying attention to your routine and don't get sucked into watching the news on one of them 24-hour news cycles. My spouse did that and went a little bananas
Oh,
for
yeah.
a few days. So
Yeah.
I
I
had to
stayed
put
off Twitter. Like I
I had
put
to put them on a media diet.
Yeah, I know. Yeah. Trust me, I was in the media. I know. So I was on Twitter and getting all my alerts, and I was like, I can't believe that's happening. And now I'm like, no, I got to stay off. Got to stay
uh-uh.
off. Well, Wes,
Just
thank you. Thank you so much for joining us. And I really, truly appreciate it. And I will put all your contact information in the show notes of this podcast and on YouTube. So thank you so much for being here.
thank you so much for having me. Always a pleasure talking with you. I hope you all have a great day, and we look forward to talking with you if we have the opportunity. Take
Yeah,
care.
don't forget, wash your hands.
Wash your hands. Yes. Happy birthday twice.
All right, Wes, thank you so much.
Bye.
Have a great
Take
day.
care. Talk
Bye-bye.
to you later. Bye bye.
Now, if you have any questions on the forbearance program or you would like any information on real estate or putting your home on the market, feel free to reach out to me at 619-818-2992. I'm going to put all of Wes's contact information right down there in the show notes, so please make sure you check those out. And as always, remember, wash your hands. Stay safe, everyone. We'll talk to you real soon. Bye-bye.